Exchange-traded funds, ETFs, have become a popular investment choice for both individual and institutional investors due to their diversification, liquidity, and ease of trading. In this article, we will delve into a detailed comparison of two unique and intriguing ETFs, FLEU and USOI. Both of these ETFs offer distinct features and investment opportunities, making them suitable for different investor objectives and market conditions. FLEU ETF, U.S. Global Go Gold and Precious Metal Miners ETF. Investment objective, FLEU, managed by U.S. global investors, is designed to provide exposure to the global gold and precious metals mining sector. Its primary objective is to offer investors a way to participate in the potential growth and stability of the gold and precious metal markets. Underlying assets, FLEU primarily holds stocks of companies engaged in gold mining and related activities, offering investors indirect access to the precious metals market. Geographical exposure, FLEU's holdings are predominantly in North America, followed by other regions such as Australia and South Africa. Risk profile, due to its concentrated exposure to the gold and precious metals sector, FLEU can be more susceptible to commodity price fluctuations and industry-specific risks. Expense ratio, FLEU has an expense ratio, which is the annual cost of managing the ETF, that investors need to consider. USOI ETF, Credit Suisse X-Links Crude Oil Shares Covered Call ETN. Investment objective, USOI, issued by Credit Suisse, offers investors exposure to crude oil by tracking the performance of a covered call strategy on the S&P GSCI Crude Oil Index. Underlying assets, USOI holds a portfolio of exchange-traded notes, ETNs, linked to crude oil futures, which is a distinct approach compared to directly investing in stocks of oil companies. Geographical exposure, the ETF's exposure is primarily to the energy sector, and it's heavily influenced by movements in crude oil prices. Risk profile, USOI's performance is closely linked to the volatility and movements of crude oil prices, which can be highly unpredictable. Expense ratio, like FLEU, USOI has its own expense ratio, which can impact overall returns. Key considerations for investors. Investment objectives, the choice between FLEU and USOI should largely depend on your investment goals. If you are looking for exposure to the gold and precious metals sector, FLEU might be more suitable. Conversely, if you want exposure to crude oil or are interested in a covered call strategy, USOI is the better option. Risk tolerance, it's crucial to assess your risk tolerance before investing. FLEU and USOI have different risk profiles. FLEU is influenced by the volatile gold and precious metals market, while USOI's performance depends on crude oil price movements. Diversification, consider your existing portfolio when choosing between these two ETFs. If you are heavily invested in a particular sector, adding more exposure to a similar area may not provide the diversification you need. Diversification is a key strategy for managing risk. Expense ratios, both FLEU and USOI have expense ratios, which can eat into your overall returns over time. Compare these ratios and consider their impact on your investment. Market conditions, the macroeconomic environment can have a significant impact on the performance of these ETFs. Factors like inflation, interest rates, and global economic stability can affect the gold and oil markets differently. Tax implications, it's essential to understand the tax implications of investing in these ETFs. Depending on your jurisdiction and personal tax situation, you may face different tax treatment for gains or income generated by each ETF. Liquidity and trading volume, check the liquidity and trading volume of these ETFs. Higher liquidity usually results in narrower bid-ask spreads and a lower cost of trading. Historical performance. Examine the historical performance of both FLEU and USOI. This can provide insights into how each ETF has reacted to various market conditions in the past. Fund management. Understand the track record and expertise of the fund managers responsible for FLEU and USOI. An experienced and skilled management team can make a significant difference in an ETF's performance. Dividend yields. Check if the ETFs provide any dividends or income distributions. Some investors seek regular income from their investments, so this can be a crucial factor. Tracking error. Evaluate how closely each ETF tracks its benchmark index. A lower tracking error indicates that the ETF is effectively mirroring its index. Redemption process. Familiarize yourself with the redemption process for each ETF. Knowing how you can sell your shares and receive the underlying assets or cash is important. Now, let's delve deeper into these considerations and provide a comprehensive analysis of FLEU and USOI ETFs, elaborating on each aspect to extend the content. Investment objectives. FLEU, as the U.S. Global Go Gold and Precious Metal Miners ETF, is designed to provide investors with exposure to the gold and precious metals mining sector. This makes it a suitable choice for those who believe in the long-term value and stability of precious metals. Gold, in particular, has historically been considered a safe haven asset, often sought after in times of economic uncertainty or as a hedge against inflation. On the other hand, USOI, the Credit Suisse X-Links crude oil shares covered call ETN, offers investors a unique way to gain exposure to crude oil. Instead of directly holding crude oil futures or stocks of oil companies, USOI employs a covered call strategy on the S&P GSCI crude oil index. This approach is distinct and may appeal to investors who want exposure to the energy sector and are willing to engage in covered call option strategies. When choosing between these two ETFs, consider your own investment objectives. If you are bullish on precious metals and want to capitalize on potential price increases in gold and other precious metals, FLEU may align with your goals. Conversely, if you believe in the long-term prospects of the energy sector and are willing to navigate the complexities of option strategies, USOI could be the better choice. Underlying assets. The underlying assets of an ETF play a critical role in determining its performance. FLEU primarily holds stocks of companies engaged in gold mining and related activities. This means that when you invest in FLEU, you are indirectly investing in these gold mining companies. It's important to understand that gold mining stocks can be influenced by factors beyond the price of gold, such as labor disputes, geopolitical events, and operational issues. On the other hand, USOI takes a different approach. It holds exchange-traded notes, ETNs, linked to crude oil futures. This means that when you invest in USOI, you are essentially participating in the price movements of crude oil. The performance of USOI is closely tied to the volatility and trends in the crude oil market. The distinction in underlying assets between FLEU and USOI is a crucial factor in your decision-making process. If you have a preference for direct exposure to a physical commodity like gold, FLEU may be more appealing. On the other hand, if you are comfortable with indirect exposure through futures contracts, USOI could align better with your investment approach. Geographical exposure. FLEU's geographical exposure is primarily concentrated in North America, with a significant portion of its holdings in Canadian and U.S. mining companies. Additionally, FLEU may have exposure to mining companies in regions such as Australia and South Africa. It's essential to be aware of this regional concentration as it can impact the ETF's performance. Factors like political stability, mining regulations, and currency fluctuations in these regions can influence the companies within FLEU's portfolio. USOI, being linked to crude oil, is inherently tied to the global energy sector. Crude oil production and prices are influenced by geopolitical events, supply and demand dynamics, and global economic conditions. Therefore, USOI's geographical exposure is widespread, reflecting the interconnected nature of the energy market. While it doesn't focus on specific countries, it's important to note that events in major oil-producing regions can significantly affect USOI's performance. Consider your outlook on the regions where these ETFs have exposure. If you have strong convictions about the stability and growth prospects of North American mining companies or the global energy market, it can influence your choice between FLEU and USOI. Risk profile. The risk profile of an ETF is a vital factor for investors to consider. Different asset classes and sectors carry distinct risk characteristics, and the same holds true for FLEU and USOI. FLEU's risk profile is shaped by its concentration in the gold and precious metals mining sector. Precious metals can be highly volatile, and their prices are subject to various factors, including economic conditions, inflation, currency movements, and investor sentiment. Additionally, FLEU's holdings in mining companies can introduce company-specific risks, such as operational challenges, labor disputes, and regulatory changes in the mining industry. On the other hand, USOI's risk profile is closely tied to the crude oil market. Crude oil is known for its price volatility, which can be influenced by geopolitical tensions, supply disruptions, and changes in global energy demand. The use of covered call options in USOI's strategy can help mitigate some of the risk, but it also limits the fund's potential for gains in a rising market. When deciding between FLEU and USOI, assess your risk tolerance and comfort with the inherent risks in these sectors. If you are risk-averse and prefer stability, FLEU's exposure to gold and precious metals may align with your preferences. However, if you are comfortable with the risks associated with commodities like crude oil and want to explore option strategies, USOI might be more suitable. Expense ratios. Expense ratios are an often overlooked but important aspect of ETF investing. They represent the annual cost of managing the ETF and are expressed as a percentage of the fund's assets. It's crucial to compare the expense ratios of FLEU and USOI as they can impact your overall returns. FLEU's expense ratio is associated with the management and operation of the ETF, including administrative costs, marketing expenses, and the fund manager's fees. This cost is typically subtracted from the ETF's net asset value, NAV, which can affect the returns that investors receive. USOI also has an expense ratio, covering the costs of managing and operating the ETF. The expense ratio is deducted from the ETF's returns and can vary depending on the fund structure and management. When choosing between FLEU and USOI, consider the impact of expense ratios on your investment. Lower expense ratios generally mean that a larger portion of your return stays with you. However, it's important to balance this consideration with the other factors discussed here. A slightly higher expense ratio may be acceptable if the ETF aligns better with your investment objectives and risk tolerance. Market conditions. The performance of FLEU and USOI is closely tied to the broader market and economic conditions, but they respond differently to these conditions due to their distinct underlying assets. FLEU, with its exposure to gold and precious metals, often benefits from economic uncertainty and inflationary pressures. Gold is considered a safe haven asset, and investors tend to flock to it during times of economic stress. Additionally, it can act as a hedge against currency devaluation and inflation. Therefore, FLEU may perform well when there is increased market volatility, economic instability, or rising inflation. USOI, being linked to the crude oil market, is more sensitive to factors affecting the energy sector. Crude oil prices are influenced by supply and demand dynamics, geopolitical events, and global economic growth. Positive economic conditions and increased demand for energy can drive oil prices higher, benefiting USOI. However, factors like oversupply, geopolitical tensions, or economic downturns can lead to price declines. As you make your choice between FLEU and USOI, consider your outlook on the broader economic environment. If you believe that global economic conditions are uncertain and inflation may rise, FLEU may be a more attractive option. On the other hand, if you anticipate increased energy demand and positive economic growth, USOI might align better with your expectations. Tax implications. Tax considerations are crucial when making investment decisions, as they can impact the after-tax returns of your investment. The tax treatment of ETFs can vary by jurisdiction and may depend on your individual tax situation. It's essential to understand the potential tax implications of both FLEU and USOI before investing. For FLEU, the tax treatment depends on the specific tax laws and regulations governing precious metals investments in your jurisdiction. In some cases, gains from investments in gold-related assets may be subject to capital gains tax. It's advisable to consult with a tax professional or review your local tax laws to understand how FLEU's returns will be taxed in your situation. USOI's tax treatment is influenced by its underlying assets and the tax laws governing commodities and futures investments. Crude oil investments can have unique tax rules, including the treatment of futures contracts and commodities as Section 1256 contracts, which may result in different tax rates for gains and losses. As with FLEU, consult with a tax expert or research local tax regulations to determine the tax implications of investing in USOI. Understanding the tax implications of these ETFs is essential for managing your overall tax liability and ensuring that you are making informed investment decisions. Tax-efficient investing can help you maximize your after-tax returns. Liquidity and trading volume. Liquidity and trading volume are crucial considerations for ETF investors, as they can impact the ease of buying and selling shares and the cost of trading. Highly liquid ETFs tend to have narrower bid-ask spreads, reducing the cost of entering and exiting positions. FLEU's liquidity and trading volume depend on market demand for the ETF. Investors should check the average daily trading volume and bid-ask spreads when considering FLEU. Higher trading volume typically indicates greater liquidity and tighter spreads, which can be beneficial for investors. USOI's liquidity is influenced by the popularity of the ETF and the trading activity in crude oil futures contracts. It's essential to review the trading volume and bid-ask spreads for USOI to gauge its liquidity. Keep in mind that futures-based ETFs may exhibit different liquidity characteristics compared to equity-based ETFs. Investors should prioritize liquidity and trading volume when selecting an ETF. ETFs with higher trading volumes tend to have more competitive pricing and can be easier to buy and sell, reducing the risk of unfavorable executions. Historical performance. Examining the historical performance of FLEU and USOI can provide valuable insights into how these ETFs have behaved in various market conditions. Although past performance is not indicative of future results, it can help you understand the ETF's volatility, return potential, and behavior during different market cycles. When analyzing historical performance, consider factors such as return volatility. Assess the historical price volatility of FLEU and USOI. High volatility may result in greater potential returns but also higher risk. Lower volatility may indicate a more stable investment but potentially lower returns. Market conditions. Look at how these ETFs have performed during various market conditions. Did they outperform or underperform their respective benchmarks? Did they exhibit consistent performance or experience significant fluctuations? Drawdowns. Evaluate the maximum drawdowns experienced by FLEU and USOI in the past. A drawdown represents the peak-to-trough decline in an investment's value. Understanding these drawdowns can help you gauge the potential downside risk. Correlation with benchmark. Analyze how closely each ETF has tracked its benchmark index. A lower tracking error indicates that the ETF has effectively mirrored its index, while a higher tracking error suggests deviations in performance. Performance during economic events. Study how FLEU and USOI performed during significant economic events such as market crashes, economic downturns, or geopolitical crises. This analysis can offer insights into their behavior during times of stress. Comparing the historical performance of these ETFs will provide a more comprehensive understanding of their risk-return profiles. It can also help you gauge how well they align with your investment objectives and risk tolerance. Fund management. The expertise and track record of the fund managers responsible for FLEU and USOI can significantly impact the ETF's performance. Experienced and skilled management teams can make informed decisions regarding portfolio composition, asset allocation, and risk management. Research the fund managers of both ETFs and consider factors such as experience. Assess the manager's experience in managing funds, particularly in the relevant asset classes. Experienced managers may have a better understanding of market dynamics and strategies. Investment philosophy. Understand the investment philosophy and approach of the management team. Do they have a clear strategy for achieving the ETF's objectives? Track record. Examine the historical performance of other funds managed by the team. Consistent and strong performance in similar strategies can be a positive indicator. Risk management. Evaluate the manager's approach to risk management and how they handle adverse market conditions. Effective risk management can help protect your investment. Communication. Consider how the management team communicates with investors. Regular updates, transparency, and accessibility can enhance your overall investment experience. A deep understanding of the fund manager's capabilities and their alignment with your investment goals can be a crucial factor in your decision-making process. Dividend yields. If you seek regular income from your investments, the dividend yields of FLEU and USOI can be an important consideration. Dividend yields represent the income generated by the ETF through dividends or distributions. However, it's essential to note that not all ETFs provide dividends, and the yield may vary over time. FLEU may provide dividend income if the underlying gold and precious metals mining companies distribute dividends to their shareholders. The dividend yield, if any, will depend on the dividend policies of these companies. USOI USOI's income generation is typically from the covered call options strategy. This strategy involves selling call options on the underlying index, which can generate income for the fund. The dividend yield of USOI is influenced by the premiums received from selling these options. Consider whether dividend income is a priority for your investment strategy and how the dividend yields of FLEU and USOI align with your income objectives. Tracking error. Tracking error is a measure of how closely an ETF follows its benchmark index. A lower tracking error indicates that the ETF effectively mirrors the index's performance, while a higher tracking error suggests deviations. Understanding the tracking error of FLEU and USOI can help you assess how well they replicate their respective benchmarks. FLEU aims to track the performance of a specific index related to gold and precious metals mining companies. Review the historical tracking error to assess how closely FLEU has followed this index. A lower tracking error suggests that the ETF effectively mirrors the index's returns. USOI seeks to implement a covered call strategy on the S&P GSCI Crude Oil Index. Analyze the ETF's historical tracking error to understand how closely it replicates the index. The use of options in this strategy can introduce variations in tracking. A low tracking error can be important for investors who want their ETF to closely match the performance of the underlying benchmark. However, it's also essential to consider other factors, such as expenses and risk, when evaluating an ETF. Redemption process. Understanding the redemption process of an ETF is essential, as it can impact how you can sell your shares and receive the underlying assets or cash. While ETFs are designed to be easily tradable on stock exchanges, there are specific procedures for redeeming shares. FLEU's redemption process typically involves selling shares on the secondary market through a brokerage. Investors can sell their FLEU shares during regular trading hours, and the transaction will settle in cash. USOI's redemption process is similar to FLEU's, where investors sell shares on the secondary market. The covered call strategy doesn't significantly impact the redemption process, which remains straightforward. Understanding the redemption process is vital for investors who may need to exit their positions in the future. It's essential to be aware of how quickly and easily you can convert your ETF shares into cash or underlying assets, as this can affect your liquidity. In conclusion, when choosing between FLEU and USOI ETFs, it's essential to consider your investment objectives, risk tolerance, portfolio diversification, expense ratios, market conditions, tax implications, liquidity, historical performance, fund management, dividend yields, tracking error, and the redemption process. Each of these factors plays a significant role in determining which ETF aligns best with your unique investment goals and preferences. Additionally, consulting with a financial advisor or conducting further research specific to your circumstances can help you make an informed decision that suits your financial objectives.